Good evening and welcome to Capital Markets on Channels Television. This is where you get the summary of transactions at the markets, everything that happened over the week. I'm Imi John McCowell. Let's begin with global markets. Starting from Europe, Germany's stocks were higher at the close of trading on Friday as gains in the software, retail and financial services sectors led shares higher. At the close in Frankfurt, the DAX rose 0.05%. while the MDAX index gained 0.45% and the Tech DAX index added 0.16%. The best performers of the session on the DAX were Vonovia SE, which rose at 6.51%, traded at 31.92 at the close. Meanwhile, SAP SE added 4.45% to end at 92.06. Zalando was up also more than 4% in lead trade. And against its previous guidance of a 25 basis point hike, the Governing Council of the European Central Bank, ECB, voted to raise the three key policy rates by 50 basis points. Everyone is raising at this time and approved the transmission protection instrument at its recently concluded July policy meeting. The increase marks the first rate hike in 11 years and the biggest since the year 2000. Talk about rate hike there, not just there. In the United Kingdom, according to the Office for the National Statistics, headline inflation in the UK rose to a 40-year high, increasing by 30 basis points in June to 9.4% year-on-year. The persistent increase in inflationary pressures reflects the lingering impact of the soaring energy prices, post-pandemic supply chain disruptions, and the pass-through effects of the Russian-Ukraine conflict. In the markets, Britain's domestic focus index outperformed the blue chip FTSE 100 for its third straight week on Friday, with insurer Beazley topping the mid-cap index following a strong annual forecast. The commodity-heavy FTSE 100 edged 0.1% higher and ended the week 1.8% higher, its best weekly performance in nearly a month. Well, let's move from there to the United States, where we see that stocks slumped on Friday, snapping a three-week winning streak as some surprisingly weak quarterly updates from companies spooked investors. The S&P 500 fell, so did the Dow Jones Industrial Average and the Nasdaq Composite. And despite Friday's losses, all three indexes posted weekly gains. Dow Jones futures will open tomorrow evening along with S&P 500 futures and Nasdaq futures. The stock market rally had strong gains last week, breaking above some key resistance. Techs pulled back Friday on Snap and other poor earnings. Meanwhile, the Federal Reserve meets with another big 75 basis points rate hike on Wednesday. So we expect, of course, that the market will react to that. Back here in Nigeria, the Monetary Policy Committee of the Central Bank of Nigeria met on Tuesday, and there was a unanimous vote to increase the monetary policy rate by 100 basis points to 14%. That's the second consecutive rate hike and the highest level in 42 months. The hike brings the total rate increase so far this year to 250 basis points, representing the largest annual increase since 2011 full year. And let's remember that the CBN governor had said that the MPC will keep hiking rates as long as inflation keeps surging. Well, the committee also voted to retain the asymmetric corridor around MPR at 100 basis points to minus 700 basis points. Cash reserve requirement, that's the CRR, at 27.5, liquidity ratio at 30 basis points. And I know that our guest here is itching to say something about that. We have here in the studio Abel Ezekiel, investment and portfolio consultant, joining us on the program. Good morning, Mrs. I said good morning. Good evening.
Yes, good evening.
I thought I was on Business Morning.
Yes. Good evening.
Good evening.
Thank you for having me.
Good to have you, Mr. Ezekiel. Yes. I could see your body language when I was reading the MPC.
Everybody raising.
Did you you see it coming? Did you think they were going to raise rates? Because a lot of people thought, because they raised 150 in May, that perhaps they will wait to see the impact of that before raising rates again.
Of course, if you see the trend, it is not limited to Nigeria. The advanced countries, developed economy too, they are raising rate. And it is just that CBN, I think they don't have any other option. They are pushed into doing that. However, we all know from our basic or some of our knowledge of limited economics, you could have, cost push inflation or demand pull inflation.
Which is why people are saying the inflation we're having now is more of cost push.
It's cost push inflation. Energy crisis,
supply disruption.
Supply disruption, FX challenges, all those type of stuff. Even the supply disruption, as you have seen, it is something that comes from the axis of Russia and Ukraine, which reverberated
even though we also have ours, we have our security also. Our security challenge is also a form of supply disruption.
Very well. So therefore, that is why, as it is, for me, I would say, if not for the fact that that kind of arrangement is more or less maybe to control the inflation, but I don't think CBN will have choice. Okay, for instance, now we have what's called diesel now being sold as much as almost 800 naira per litre, which we have never seen in the history of this country. So, and what effect would that have in the cost of production by the manufacturing concern? Because this form part of most of their inputs they use in producing, some of these products. And definitely, the price must go up. And CBN have a duty to want to curtail inflation, but I don't know, the effect, or don't know how far, because as it stands now, raising it will have its own effect on the purchasing power of an average Nigerian. There's a limit as to how people could be able to afford some of these products, because now we have food prices, the market in the region of about over 20%, and even NBS has actually, come up with a figure of 18.60% as per inflation rate in the system. So raising this, that will have its own adverse effect on the purchasing power.
Because some people are saying that, what if, of course, with the hike in MPR, access to fund becomes more expensive, and this could deter output. Even the fragile manufacturing, you understand, and output that we have, and this could lead to stagflation. So, should we keep hiking rate? What if it doesn't deal with inflation, and then we still see inflation since we're not dealing with the cost?
Yes, that is the thing. I would expect that instead of hiking inflation, we'll look for how can we be able to get some of these things, to an extent, to have this raw material at a lower, or this cost push, as it were, at a lower, so that it does not have effect on the unit price of this product in the market there. Because hiking now, like we have said, this is more or less like the funding, cost of fund, borrowing of fund, get higher. It will discourage people from borrowing. And at the end of the day, the economy contracted. And if the economy is contracted, what do you have? Job loss. You understand? A lot of companies will...
More job loss, because we already have job loss.
Yes, in the horizon. And we cannot, we cannot afford that, because I would expect that if you generate or you actually promote employment opportunities within the system, it will actually boost the economy.
Well, I think we're in a very tight corner, or the CBN is in a tight corner, and that's why the CBN keeps talking about the developmental finances, their efforts, other ways that they try to boost growth in the economy. We've heard of the programs, the non-oil export program, the RT 200, the 100 for 100, and trying to boost agriculture production and all of that. And we hope that this will balance up. So just before we go into the equities conversation, which I know is your favorite. Let's see what happened over the week at the NASD OTC Securities, the unlisted market. In the unlisted market, the market closed the week with a negative movement on the NSI. The NSI return decreased by 0.67% to close the week at 766.92 points, and that's against 772.08 on Friday, the previous week, the 15th. That week, this past week, we saw investors lose 0.01 trillion in value. Market cap closed at just about a trillion naira. 14 deals, stocks traded were 10 compared to the week before. We see that there was a drop in that NASD market. And then there was, however, 318.54 increase in the total number of value traded during the week, as week 29 saw that NASD investors traded a total of 89.59, or about 89.6 million in value, compared to over 21 the previous week. The week closed with Central Securities Clearing System PLC ranking top among the 5 most traded securities by value, and NIPCO PLC stood as the 5th most traded security by value for the week. And let's go to the most popular market now, I want to say, the equities market. There we saw that there was a total turnover of 917.19 million shares, worth 14.80 billion naira, traded in over 19,500 in the week by investors on the floor of the NGX. And that's in contrast to 504.322 million shares valued at 7.517 billion that exchanged hands in the previous week at 12,393 deals. The financial services industry, measured by volume, led the activity chart with 648.207 million shares valued at 6.25 billion naira, traded in past more than 9,000 deals, thus contributing to 70.63 and 42.27% to the total equity turnover volume and value, respectively. Looking at the consumers' goods now, it's followed with 102.605 million shares worth 3.211 billion naira, traded in just about 3,000 deals. The third place was the conglomerate industry, with a total turnover of 36.218 million shares worth 193.47 million naira, and traded in 562. Now let's see the top trades. Top gainers for the week were Cornerstone, gaining more than 26%, Seplat about 10%, Linkage about almost 10%, or 9.43%. Those were the top gainers. The top losers were NACO, Carverton, Honeywell, gaining 33%, 16 and 14%. respectively. And then when we look at the price movement during the week, we see that 19 equities appreciated in price during the week, lower than 20 the previous week. 36 equities depreciated in price, higher than 32 in the previous week, while 101 equities remained unchanged, lower than 104 equities recorded in the previous week. So, Mr. Ziko, why do we have so many stocks left unchanged?
Yes, you should. The consequence of rate increase, MPR increased to 14% now. Definitely have some negative effect in the equity market. And another thing again is that we are still expecting the second quarter. That's a fair result for most of these companies. Actually, it's only few ones. We have seen
yes.
UCAP, we have seen African Prudential, we have seen Unilever. So definitely investors are waiting to see how the number looks like. So it's more or less like just waiting the wing. Fine, based on what you have, the picture I can pick from what you have analyzed or read, based on the activity. If you look at the activity this week, it's higher than last week. This week, we have 917 million shares compared to last week of 504 million, about 17 billion compared to 14 billion this week. 14 billion last week. Now, what you can pick from that is that investors are taking advantage because most of these securities are getting a little bit lower now in prices. Nigerian Bureau at May was trading for as much as about 77 naira. As at Friday, it was trading below 49 naira. Look at a stock like GTCO.
Yes.
It was trading as high as about 27 naira around March or April.
Okay. All right, Mr. Ezekiel. Sorry, please just hold your thoughts. Just pause for a couple of minutes. We have to take a break. When we come back, we'll continue. You're still watching Capital Market here on Channels Television. They're going to get the background information on how the markets traded all through this week. That's just in a moment. So stay with us.
Thank you.
Welcome back. You're still watching Capital Market on Channels Television. And Mr. Zico, you were just telling us about some of your observations.
Yes.
And it seems that investors are really taking advantage of the dip.
Yes, of the low pricing, as it were. Zenith Bank closed at 2070 yesterday. As at, that was last trading day, Friday yesterday. So it shows that the stocks or the company are being widely priced or lowly priced, as it were. If you look at the performance so far, compared with, we have a movement. Ordinarily, this month of July now, we have been really bad. But thank God for what happened on 15th of this month of this July. That's when Airtel moved 173 naira, which makes Airtel to close at 1905 as with 1,000 naira.
We also had a huge transaction with GTCO during the week.
Very well. GTCO is always, if you look at the number of trades on GTCO, is only about 300, 400 number of trades. In fact, they always take the highest number of trades. If you look at it, when I then look at the volume or the unit being traded, it only turns out large unit every trading day. So it's a sign of investor confidence in that sector, that security, but at the same time, it's dropping its prices. So it therefore means that some of these costs too is going to weigh on their earnings. Their earnings, if care is not taken, may likely go below what they did in Q1. So based on that, that's what you reflect, or the investors are reflecting in the prices, which is leading to their continuous depreciation.
But one would have thought by now the earnings is already set. It's just waiting to be published or released.
Yes. Some of these earnings, like for instance, banking earnings will be sent to CBN for approval, and then they have a window of 30 days for Q. It is only for your full year. You have a kind of a period of about 3 months, 90 days. But for your quarterly earning report, you have 30 days within which to turn your. So definitely we are in the season now, because today is 23rd or that's 24, so which means we have about 6 days to capture to go into. So
that means we're going to have a flurry of earnings by this coming week.
Very well.
What reaction should we expect from investors?
Yes, investors will trade cautiously. It will not be bullish from what you have seen, and at the same time, people want to see the numbers before taking a decision. Though the MPR too will play a significant role, because a lot of investors want to move into bond market. That is a risk, kind of a risk-free asset for investors.
Well, even that market has been quiet.
Very well.
Really quiet.
Very well. The last trading auction that the DMO did on Monday, I think for the first time, it witnessed a lot of under-subscription. DMO was actually targeted about 225 billion kind of subscription, but they were able to realize 123 billion, which falls short of their expectation.
That's very unusual. They're always oversubscribed.
It's always oversubscribed, but you may not blame, the investors in that space too. That was even when CBN was trying to hold their MPR meeting.
So everybody was waiting and watching. But another factor is how much is the activities in the political scene, how much of a factor is that in all that we are seeing in the investment space?
For now, it's a factor, but it's not yet too glaring, or it's not yet.
Because even the MPC consider that, and looking at the money that's coming from that from the activities is going to further surge inflation or push inflation, inflationary pressures.
Yes, you are well aware. This the European economist, Marima Wani, has even predicted that 2023 election is going to be one of the most expensive election we are going to hold in this country. It was even targeted an average about 6 trillion naira going to be, spent on that election, and to an extent, this will lead to a surge of liquidity in the system, because these are some of the money that, politicians will use for one way or the other to campaign and to mobilize the electorate towards the election, and it's going to be highly competitive. So I think that's another factor. But for now, it's still the campaign have not started. We still have about 6 months, into the election.
I think starting in September.
September, September, October, we still have about election around early next year. So for now, for me, it's still too early in the day. But to an extent, it's the macroeconomic factor, ravaging the whole universe. Imagine an American economy where inflation is trading at almost 9.10.
9.1, yes.
You understand? In the UK,
it's is 9.4. UK has overtaken them. And UK is heading for recession.
For recession, you understand? So for the first time in about 40 years. So these are the issues that they are very germane, and definitely Nigeria is going to, benefit adversely from that as we speak.
How so?
Adversely as it is now, because this is what is happening. You get to a point whereby, because the purchasing power, for instance, the stagflation we are talking about, is now staring on the face. It's whereby prices are, increasing, and the purchasing power of an average citizen is going down, or the income level is going down, and we have high unemployment. Definitely, it will have an adverse effect on a household.
Is there a way of escape from your point of view?
Escape from?
Escape from all of this.
Is there a way of escape? And the way of escape,
maybe a hedge for investors?
For me, let us boost our earnings. You understand? Fine, we have gotten some, increase in price of crude based on this Ukraine and Russia, which has actually boosted. But to an extent, government, for the first time too, is even in a deficit. Because of, the revenue has, funding,
debt servicing is
at where revenue, debt service is now about 1.94 trillion, while revenue is about 1.63 trillion. So for me, it is just for government to actually put up their thinking cap to see how to generate enough money to boost the economy, so that we don't go into unnecessary recession for another time again.
Yes, I think I heard some analysts say that it's time to start buckling up, like double buckle up, because
it's necessary.
Recession. Because we remember the other time that there was recession, it was not easy.
It wasn't easy.
And if we have recession on top of what we are facing now,
terrible.
It might not go down well with a whole lot of people. Well, just before we let you go, Mr. Zika, how do you see the market? Do you see this bearish sentiment continuing in this coming week?
Yeah, very well. Based on the fact that we are still expecting the earnings to hit the market, and we have this rate increase, as it were, I expect some investors to realign their investment portfolio, taking advantage or moving into the fixed income space to take advantage of the high rate of interest within that space and leaving the equity market, unless we have some company that come out with very good, earnings report that will stimulate the interest of investors. Maybe we now have some fringe here and there among the companies.
But let's not also forget that even these companies we're talking about are also affected by the macroeconomic parameters that is in the country. And this will, of course, affect their outputs and their earnings.
It will affect them.
Yes,
it's a cycle.
It is a cycle.
It's a cycle.
Well, thank you so much, Mr. Abel Ezekiel, investment and portfolio consultant. Thank you so much for your time with us this evening. Just before we go, outlook for the week, according to Codros, they believe that the full swing of the first half 2022 earnings season will dictate market sentiment and possibly drive some positive performance as investors hunt for bargains in fundamentally sound stocks with a consistent history of interim dividend payments, notwithstanding the envisaged intense selling pressures on stocks of companies that grossly underperformed in the first half of the year. Overall, Quadros reiterates the need for positioning in only fundamentally sound stocks, as the weak macro environment remains a significant headwind for corporate earnings. And that's where we'll say thank you so much for being a part of Capital Market today. I do hope you got one thing or the other, and perhaps putting on your thinking cap on where you can hedge in these days of global headwinds. As you do that, we'll say keep it up, and we'll be back again next week. I'm Ini Jodmekwa. Enjoy the rest of your weekend.